Hello there, Sprinkles. Have you been polishing your diamond hands like I told you to? Perking your ears up, sitting with your back straight? I've got a friendly reminder for you. The US Treasuries are running on a Ponzi system. They will eventually crack. We don't know when they'll crack, but they will crack. Eventually, those bondy bonds, their prices are going to go down. Now, it could zip around. The bond market can go and change its direction based on Fed power moves. We don't know precisely what next move happens, but I can tell you this. The US government does not like the price of these bonds going down so fast. Why? It's because they haven't had enough time to adjust their spending. Imagine going and telling millions and millions of people, oh yeah, you know all those payments I promised? Cut it. You can't do that. Jay Powell is probably going to get a tap on the shoulder. And when they do that, they're probably going to talk about the inflation target. You know, the US Fed, they're going to be forced to increase that inflation target band. 2 to 3% might be the next step. So right now, they just say a flat 2%. Why do they do that? It's because they want the market to go towards it. So they know if they write 3%, then people will be okay with like 3.5%. They don't want that. They just say a flat out 2%. They want to give themselves room. That's why they say 2%. They give them room for error. They can psychologically manipulate everybody. That's their job. Because the interest rate is a very blunt instrument. So they need to keep those bonds bid. You see these bonds? They've actually got to bid them up. They have to bid them up. If they bid them up, the yield goes down. So right now, it's like the government's paying like 4.2%. I mean, that's huge on their giant amount of debt. If the price goes up here, maybe it's only like 3.5%, 3.4%. That alleviates pressure from the government. They're all working together, but they pretend they're independent from each other. You also got to know that friends will make it. Friends are long. Crypto here, a wild friend appears. Because these bonds seem to be correlating with Bitcoin. You see, the stock market went up, but bonds went down. So crypto is following bonds more than you think. We don't just correlate one for one to the stock market all the time. And I have the chart here for you just to demonstrate to you again. This is the Bitcoin chart is in the candles, and the orange chart was just the US 10 years, which I just showed you, the same chart from before. Do you see how, I mean, they all fell together and they're all kind of together? Now, if you map out where the stock market is, the stock market back is like near its highest. Stock market's up here where the green is, but look where we are. So what's that tell you? It tells you that crypto seems to appreciate bonds, and it makes sense. It does make sense because bonds represent fiat and liquidity. So if the bond prices are getting destroyed, what's that mean? It means fiat is getting stronger. The US dollar is getting bid because their yield's going up. And you don't need to come into crypto for your yield because you're getting 4% in the US stock market, the US bond market. You know, but if their bond prices go up, so if this orange line, if you see the bond prices start going up, the yield goes down, and then people then have to seek other places to park their money. And we're dealing with trillions of dollars here, or hundreds of billions. So we're not dealing with like, you know, little Timmy with his $10,000. He wants to go like degen some Uniswap altcoin. We're dealing with bigger numbers here. And Cal has a picture of a lovely black hole sinking and sinking and sinking. It is a metaphor for the US Treasury Ponzi system. It really is a black hole. Yes, this picture is extremely relevant because when you're looking at these bonds, they have to fund bigger and bigger spending. Governments never want to cut the spending. And would you, man? Would you? Honestly, no one wants to be the politician who comes in and says, well, we're just going to cut everything. You know, you guys have been living above your means. They can't. There'll be a revolution overnight. Because people will say, what do you mean living beyond our means? You've been giving all the money to your rich friends. The stock market's been going up for 10 years. Our wages haven't. That is the voice that they will be facing. And with that, it's interesting to think about where the pricing of Bitcoin and Ethereum is. There's a chart here. It's a smarty, nerdy pants chart. It has the Ethereum layer 1 and layer 2 addresses showing its growth over time. And what's interesting is it shows that, look at this, Ethereum is actually fairly valued right now based on the network effect. And I had to reiterate, that's right, fairly valued. You'd expect from Crypto Bull for us to say, you know, you'd expect us to say, oh, it's super undervalued, dude. Now, it's tongue-in-cheek, friends. Price and value are different. Based off the conditions today, it's fairly valued. But here I am to say, no, we're not 1 dot or 2 dot, but 3 dots. For it to change, we need a change of liquidity and cycle conditions. You know, the price, there is no fair price. What's the fair price? The price is the price of the price that is today, based off the net effect of human emotions and fear and greed and everything else in between, hope and disbelief. But is it the true price? Well, it's the price of today, but it's not. Well, what's even fair value? Because we're always pricing in the future. So when you're looking at even Bitcoin or Ethereum, its fair price is the price today. But like if you knew, you go, wait a minute, they're definitely going to print money again. They're definitely going to cut rates. The US economy is definitely going to crack at some point. China's definitely going to stimulate. There's definitely going to be a liquidity injection, right? Well, you'd get long now. But because crypto is in its early infancy stage, still relative to the rest of the world, relative to the maturity, you're not going to get a lot of people who have the balls, the testicles, the ovaries to get in and buy. They wait for the green candles. Once they start seeing the green candles, then they jump the train and they say, oh, that's right, liquidity. Oh, that's right, stimulus. Oh, that's right, China. That's when they put all the pieces of the puzzle together. They do it on the big green candles. They don't do it when it's poopy McPoop time. In the car time, no one wants to think about it. That's why it's super important. You really got to think about what's fair value, man. If we know this stuff is coming, absolutely yes. Emphatic yes, I say to you, because Ethereum is underpriced. 100%. No doubt about it. It's underpriced. But based off boredom, fear, greed, and the net effect of all the market, it is what it is today. But we all know nothing's static anyway. You know, that's why I mentioned here as well, the market is like, it's like acting that it'll never come, right? But these things need a bit of a kick. They need a bit of a kick of the boom. Because this is, the US Treasuries, US 10-year, okay? What would that kick in the boom mean? The kick in the boom might be if the US Treasuries swoop upwards. If the US Treasuries can start swooping upwards, you're going to start to see the narrative of stimulus come out. And them saying, like, you know what? The Fed, they're going to have to cut rates sooner or later. Or they're going to have to, like, print money and backstop one of the bonds. That talk starts coming. Once that talk starts coming and bad data comes out, as each bad data point comes, so there'll be bad data, bad data, bad data, bad data, you actually see that bonds will go up on the bad data and crypto will go up with it. And it'll be interesting if the stonk market, which is all the way up here, if the stonk market goes down as bonds go up and crypto follows the bonds. That'll be a very nice scenario. But I wouldn't count on it, I wouldn't bank on it. We'll just have to be ready for anything that they throw at us. Because, I would love this scenario and so would you. But this is the copium scenario, right? The copium scenario is, okay, we go up with stocks, and then when stocks go down, bonds go up, and then we'll go up again with the bonds. Isn't that fantastic? What a beautiful world. You're just going up only forever and ever and ever. That's the dream scenario we'd want. And we never ever forget, we are in the then they fight you phase. That's why we're allowed to win, but we're not all allowed to win. With those recent US regulatory bills that was thrown at us, in the US government proposed bill, they have a part in there where it says you will go to jail unless MetaMask raise the swap fees to maximum dollars for non-KYC people. So if you have not sent them, so here, example, right? They want MetaMask to make your swap fee cost $10,000 for one trade. So if you want to trade from Ethereum to buy a poopy coin, they want to make it cost $10,000 if you don't send them pictures of your willy or pictures of your toe or your earlobes. This is very sad, unfortunate state. But hey, these are regulatory bills. So a lot of people, they've lost their minds after this. Okay, so like, hey, take all my money. There's nothing in there. What they do is it's the government, man. They're slimy politicians. So they know, right, that here's the crypto people and here is the government people. We're going to draw a big poopy because that's exactly what they are. And actually, it's going to be a quite sad poopy and it's going to be a bit smelly. So there is a line in between. Okay, there's a dotted line, a place in between. Okay, crypto people, what do we want? See, for crypto, we want no regulation ever. Leave us alone forever. That's what we want. Governments, they want all the regulation. They want to see everything. Why? Because they're going bankrupt and they need to observe when the money goes circling around, they want to tax it every time it circles around. It's like a digital economy. That's what they want to see. Because, the US Treasury is in a Ponzi system. Everyone's in debt. They've got to raise money from economic activity somehow. So the crypto people will say, never, never, never. Never can you get us. And then the government people will say, we're going to ban everything. Everything's going to go down to zero. We're going to regulate you. The truth is it's going to be somewhere in between. There's going to be something in a happy medium. Look, friends, yeah, on the one hand, I want freedom and liberty and all these other things. Okay. But on the other hand, I'm like, do you really want grandma and grandpa to click on the wrong email and then it steals their MetaMask seed phrase and they've lost their $14,000 in 5 seconds to some pathetic subhuman filth scammer? Do you really want that world? We have to build those systems. Okay, those systems will get built. They are getting built, but you know what I mean? And if somebody was able to breach that, you want a system where you're like, okay, there's got to be a middle ground there. There really does. And if we want big institutions to come in, there's going to have to be some white papers for them here and there. But of course, the ones that they're demanding for, they demand a lot. So they're pushing all the way here. They're like, no. They're pushing the ball all the way to their end. They're like, hey, we're going to ban them all, do this. And they know what's going to happen is they've got maybe 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 items in there. They know they're like, hey, there's 3 core ones that we actually want. Let's just throw 10 in there and they're going to have to fight every single one. So that's what's actually happening. Everyone's trying to knock off every single one to see where the happy medium is. And don't forget, at the end of the day, it's run by the evil globalist banking cartel, US Fed puppet wing arm group. It is run by them. So they're going to do whatever they need in order to grab power. We're in the then they fight you phase. You never ever forget that, because as we know, the fiat system's on its way out. It's poopy. They printed too much. We all know this. There's too many poor people. And the old fiat system, it's so irrelevant that literally Lely has asked me about Friendtech on a thread got to do with the US regulation. That's how boring the US, the fiat system is. There's just nothing in it for the people. There's nothing there, no excitement. So Lely's asked, hello, Sami, why is Friendtech on Base and not PulseChain? I feel that you are stabbing yourself and your community in the back by this move. What is Base really? So I thought it's some sort of sarcastic tongue-in-cheek, Coinbase's layer 2 chain is Base. And yeah, the volume ain't great anymore, 20 million, but it has 100 million customers. Okay, so just to let you know, firstly, I explain it here, okay? When you're looking at this, I'll mention here, Friendtech was given $50 million by Paradigm. They're like VCs, right? And they wanted them on Coinbase layer 2. That's it. So what are you going to do about it? Argue? Build your own one. I don't know how to build my one, right? All I can do is wear fluffy slippers, spin on a squeaky chair. And it's only 3 weeks old now. And I said, if people want it on PulseChain, go build it. Somebody please build it, because I don't have that skill set. I have other skill sets, right? These chairs need to be spun on. Very squeaky. Squeaking around. So that's why you're observing this. You can't think about, well, you're sending everybody to the wrong place. You got to think about it like this, man. There are 100 million customers on Coinbase, all right? 100 million. Let's say Coinbase is able to onboard 3 million people out of those into MetaMask. They're going to be pushing 100 million of their customers onto it, but I don't know if 100 million people really want to play with it because their account's too small, everything's down only. Let's say there's down to 3 million. Now, imagine PulseChain can just get 1% of that as daily users. You might think, that's not big. That's not big. Do you know how much 1% is, friends? That's more than 0%. 1% of 3 million is 30,000. You know, the daily active users for PulseChain is about 8 to 10,000 per day. So if you can just grab a small piece of that Coinbase, if you can offer them something, you have 30,000. If, by the way, if this happens, this is huge for the ecosystem. You get like a 4 to 6x on the price from day one sacrifice, I think, pretty much. I'm not even joking. You might get like a 4 to 6x from day one sacrifice. That's how big, if you can get these daily active users, it'll be. That's how big of an advantage. But you can't just say, well, let's not do anything. We can't do that because Coinbase got a lot of rugs. But this technology, it's different. It's cool. Social Fi, yeah, maybe it's a Ponzi. Maybe nothing works out of it. Maybe there's another version coming out. But We don't know where the buck's going to go. All we know is that it's moving somewhere, and all we're going to do is try to take advantage of it. That's why if you keep an open mind and open heart, you'll be able to take advantage of the trends. Otherwise, you'll get left in the dust like everybody else. Don't forget, like, subscribe, bell button, all. Tell mum and dad, I love squeaky chairs, and I love you, friends. I'll catch you next one.